The Bitcoin Standard, the decentralized alternative to central banking. Part 1. Intro. The question nobody asks. Have you ever felt like the money in your wallet just keeps getting weaker? Your salary stays the same, but your morning coffee somehow costs more every week. A few years ago, 10 million Vietnamese dong could last you a whole month. Now, it barely covers a few bills. But the issue isn't just rising prices. It's that your money is losing value, slowly, steadily. Every day, every hour. We grew up in a world where money is supposed to represent our time, effort, and value. And yet, that money is controlled by a small group of people. They print as much as they want. They inflate as high as they want. And when a crisis hits, their solution is always the same. Print more money. So what is money really? Have you ever asked yourself, why was gold money for thousands of years? Why did we switch to paper? And why is something like Bitcoin, just a string of code on the internet, suddenly gaining global attention? The Bitcoin Standard doesn't start with price charts. It doesn't teach you how to buy the dip. Instead, it asks the tough question most people never stop to ask. Why is our current monetary system so broken? And is there a way out? In this video, I'll walk you through the most powerful ideas in the book. Because Bitcoin isn't just an investment, it's a financial declaration of personal freedom. You don't have to be a tech expert, but you do need to understand why you can't afford to hand over your financial future to someone else. So let's begin this journey through the history of money and see why Bitcoin might just be the best form of money humanity has ever created. Part 2. What is money? A journey through monetary history. We use money every single day. But strangely, most people don't know what money actually is. Money isn't just a piece of paper with a famous face on it. It's not just a number on your banking app. At its core, money is a tool for storing value, a tool for exchanging value. And if you want to understand Bitcoin, you first have to understand how money evolved, starting way back when people traded chickens for salt. The original problem was simple. How do I trade what I have for what I need? But as society grew, things got complicated. Imagine this. I have a pair of shoes. You have an axe. I want your axe, but you don't want my shoes. So the deal falls apart. This is called the coincidence of wants, and it's the reason direct barter doesn't work at scale. The solution? Money. A common medium that everyone accepts, not because they need it directly, but because they know others will accept it too. Over time, the best forms of money all had certain traits in common. They were divisible, easy to break down into smaller units, portable, easy to carry and move, durable, didn't rot or wear out, scarce, not easy to copy or overproduce, and salable, meaning everyone wanted to hold it. Gold and silver won that race. They were rare, they didn't rust, they were hard to mine, and most importantly, people trusted them. For thousands of years, gold wasn't money because a king said so. It was money because the market chose it. People just knew, if you want to preserve value over the long term, you hold gold. There's one more key idea. It's called the stock-to-flow ratio. This is the ratio between how much of something already exists and how much more gets produced each year. Gold has a very high stock-to-flow ratio. That means even though more gold gets mined, the overall supply grows very slowly. And that's exactly what makes gold stable. That's what made it the ultimate form of hard money. Now compare that to other things. Iron or copper, too abundant, no long-term value. Rice or salt, it spoils too quickly, not durable. Gemstones, nice to look at but too inconsistent to be a universal standard. Every time a society used soft money, meaning money that's easy to produce, the same thing happened. Devaluation, crisis. But whenever societies used hard money like gold, they thrived. Think of the Roman Empire, the Renaissance, the Golden Age of Europe in the late 1800s. All of these flourished under gold-based currencies. So what's the takeaway? Not everything can be money, and history teaches us one thing clearly. A good money has to be hard to create more of. And this is exactly where Bitcoin steps in. But before we talk about Bitcoin, let's take a closer look at what happened when humanity walked away from hard money and handed the power to print money entirely over to governments. Part 3. The rise and fall of government money. When humanity discovered hard money like gold, it didn't take long before they also figured out how to cheat it. In the beginning, gold and silver coins had a standard weight, let's say 8 grams of gold. But over time, empires and governments, from ancient Rome to modern nations, began playing tricks. They shaved off gold, mixed in cheaper metals, and stamped the same value on the coin. This was called coin clipping. In plain English, it was silent devaluation. Then came an even bigger twist: paper money. At first, paper money was just a receipt for gold. You deposited your gold in a bank, and the paper note was proof that you could claim it. But governments soon realized something. People weren't actually withdrawing their gold. So why not just print more paper, even if there wasn't more gold? That's when the gold standard began to fall apart. Paper money no longer represented gold. It became just a promise, and a promise that could be changed, broken, or simply erased. Then came the year 1971, a historic turning point. President Richard Nixon officially ended the ability to convert US dollars into gold. From that moment on, the world entered the age of fiat money, money backed by nothing but political will. And what happened next? National debt exploded. Inflation started eating away at purchasing power. Prices for housing, education, and healthcare skyrocketed. And the wealth gap widened more than ever before. But the most damaging effect of all, money lost its ability to hold value over time. The longer you save money, the poorer you become. Why is that dangerous? Because it destroys long-term thinking. It makes financial planning feel pointless. If you know your money today will buy less next year, what do? You spend it, you borrow more, you live for today. The result is a society addicted to consumption, allergic to saving, and incapable of planning ahead. A short-term mindset is the root of every major financial crisis. And the reason this keeps happening? Because we gave the power to print money to people who never say no to printing more. No one gets fired for printing money. No politician loses votes for promising more spending. And no central banker gets blamed when the currency collapses. This is exactly why Bitcoin was created. Not to replace online banking, not to make your coffee payment faster, but to be a kind of money that no one can print. A form of money that doesn't require trust, because the rules are locked in code. And now, you're beginning to see why the Bitcoin standard isn't just a book about technology. It's a wake-up call, a warning for a world that spent the last 100 years trusting broken systems. In the next part, we'll explore Bitcoin itself and why it's not just digital money. It's a financial invention designed to restore individual freedom. Part 4. Bitcoin, the first hard money of the digital age. In 2008, the world was deep in financial crisis. Banks were collapsing. Governments were rescuing the economy by printing trillions more in new money. Right in the middle of that chaos, a mysterious developer named Satoshi Nakamoto quietly posted a message online. "I've been working on a new electronic cash system, peer-to-peer, no trusted third party." And just like that, Bitcoin was born. Bitcoin isn't a stock. It's not a flashy fintech app. It's digital hard money, built to be untouchable and incorruptible. So what makes Bitcoin so different? First, its supply is fixed. There will only ever be 21 million coins. No government, no bank, and no developer can create more. This is the first time in human history we've created something truly limited. Second, it's decentralized. There's no central authority. Bitcoin runs on a global network of independent computers. There's no company behind it, no server to shut down, no off switch. Third, it's secured by math, not by trust. You don't have to believe in anyone. Just believe in the open source code and the math behind it. Every transaction is verified through a process called proof of work, which makes fraud nearly impossible. And fourth, Bitcoin is a global settlement network. No bank required. Try sending $1 million across borders through a bank. You'll wait 3 days and fill out a pile of paperwork. With Bitcoin, it takes 10 minutes. No questions asked. Bitcoin isn't just money. It's a full-blown financial network. Imagine gold, but instantly transferable. Divisible down to 100 millionth of a coin. No need for a vault or armored truck. Bitcoin is gold plus the internet, plus freedom. And why does this matter? Because Bitcoin completely rewrites the rules of finance. Money doesn't belong to governments. It belongs to natural law, scarcity, transparency, and fairness. Bitcoin isn't a promise. It's a protocol that encodes scarcity directly into its design. Every 4 years, the amount of new Bitcoin being created is cut in half. By the year 2140, there will be no new Bitcoin at all. So instead of trusting someone, you just need to understand the code. This is the shift from faith to math. From I trust the Fed to I verified it myself. We used to place blind faith in the financial system, and again, that faith was betrayed. Bitcoin is different. It runs on rules, not emotions, not politics. And if you care about long-term value, not just short-term hype, then Bitcoin might be the most important savings technology of the 21st century. That's why the book is called The Bitcoin Standard. Not because it will replace fiat currency overnight, but because it offers a new benchmark for a world that's exhausted by the printing press. In the next part, we'll explore one of the most powerful concepts in the entire book: time preference, and how it affects your finances, your decisions, and your entire way of life. Part 5, Time and Money Mindset, the concept of time preference. Have you ever noticed how some people are great at planning for the future? Saving money, investing, and building a stable life, while others live fast, spend impulsively, take on debt, and buy things based on emotion? The biggest difference between these two groups isn't IQ. It's not about how much money they started with. It comes down to something deeper: time preference. So what is time preference? It simply means how much you value the present compared to the future. People with a high time preference want satisfaction right now. They choose short-term pleasure over long-term success. It's the mindset of live for today, worry about tomorrow later. On the other hand, people with a low time preference are willing to delay gratification in order to build lasting value. They think long-term. They might say, I don't need a new car today. I'd rather invest that money so I don't have to worry about car payments 5 years from now. Now here's the key insight. Time preference isn't just a personality trait. It's shaped by the kind of money system you live in. When your money constantly loses value, like it does with today's fiat currencies, people naturally shift toward short-term thinking. Why? Because saving money actually makes you poorer. If you know that 100 million Vietnamese dong today will only be worth 80 million in a few years, why would you save it? On the other hand, when you use hard money, like gold or Bitcoin, your money retains value over time. It might even grow. And when people know their savings are secure, they do things differently. They save more. They invest for the long term. They make plans for the future. They avoid impulsive spending. Societies built on low time preference tend to be more advanced, more innovative, and more humane. One of the most powerful lines in the book says this: hard money doesn't just affect economies. It transforms how people think, how they love, how they create, and how they live. When people understand the value of time, they stop gambling with their future. They stop chasing shortcuts. They start building real wealth, instead of watching it melt away through inflation and debt. That's why Bitcoin isn't just a piece of technology. It's a mindset. It encourages long-term thinking, personal responsibility, and the protection of real value. So if you're still asking whether Bitcoin is going up or down today, maybe take a step back. The bigger question is, are you building your life on low time preference, or are you stuck in the short-term chaos of fiat culture? In the next part, we're going to tackle some of the most common criticisms people throw at Bitcoin and see if the idea truly stands up under pressure. Part 6, the big questions and common criticisms. Is Bitcoin really that good? Spend 5 minutes talking about Bitcoin and you'll hear the same objections every time. It uses too much electricity. Criminals use it to launder money. If you lose your wallet, it's all gone. Who's in control of it anyway? And what if the government just bans it? Let's walk through these questions one by one, not from hype or fear, but with grounded logic. First, the electricity question. Yes, Bitcoin uses a lot of energy. But the real question is, what is that energy being used for? It's used to secure the system. Every Bitcoin block is verified through a process called proof of work. Computers around the world compete to solve complex math problems, and that effort makes the network secure. It makes fraud nearly impossible, and guarantees no one can just print more Bitcoin. Want a financial system that's hard to corrupt? It has to cost something to protect. Gold is the same. Mining it takes real fuel, real labor, and real time. But nobody calls that wasteful. Next, the claim that Bitcoin is for criminals. Let's be honest. the #1 tool for crime is still cash. Drug cartels don't use Bitcoin. They use US dollars. And major banks have been caught laundering hundreds of billions, yet they still operate today. What about Bitcoin? Every transaction is public. Every transaction is permanent. Every transaction is traceable on the blockchain. Bitcoin is not anonymous. In fact, it leaves a clearer trail than any banking system on Earth. Now let's talk about wallets. Yes, if you lose your private keys, you lose access to your Bitcoin. But that's not a flaw of the system. It's about personal responsibility. It's like losing your safe and forgetting the combination. That said, we now have many secure options for storing Bitcoin. Cold wallets, multi-signature wallets, recovery systems. The real issue isn't whether Bitcoin is risky. The real issue is whether you've learned how to protect your own wealth. Next, the question of control. Who controls Bitcoin? No one. And that's exactly the point. There's no CEO, no company, no country backing it. Bitcoin runs like the internet, maintained by thousands of independent computers across the globe. Want to change the rules? You need consensus from the entire network. That makes Bitcoin the only asset in the world that no one can inflate, freeze, or seize, if you hold it the right way. And finally, the big one. What if the government bans it? It sounds simple, but it's not. China banned Bitcoin mining, and the network kept going. In fact, it got stronger. Many countries have banned Bitcoin only to later reverse their decision. And in the United States, Europe, and Japan, Bitcoin is legally recognized as an asset. Here's the truth. Governments can regulate companies and exchanges, but they can't ban open-source math on the internet. You can't ban algebra. You can't ban a zip file that's shared around the world. So what's the bottom line? Most of the criticisms you hear about Bitcoin come from misunderstanding or misinformation. And that's why the Bitcoin standard isn't written for gamblers or trend chasers. It's for people who want to understand the real roots of money, freedom, and responsibility. In the next part, we'll go even further. Because Bitcoin isn't just a store of value, it has the potential to become the global operating system for finance. A new standard for payments, trust, and settlement in the digital age. Part 7. Bitcoin as the operating system of the future. Imagine this. Gold was once the financial operating system of the physical world. Now, Bitcoin could become the financial operating system of the digital world. Why do we call it an operating system? Because Bitcoin isn't just digital money, it's a platform. A global foundation that sets the rules for storing value, making transactions, and transferring wealth without needing banks, governments, or any central authority. Just like Windows runs your computer or iOS runs your phone, Bitcoin has the potential to power an entirely new financial system. No central banks, no monetary policy, no one in charge. Now imagine this future. Central banks using Bitcoin for final international settlements, just like they once did with gold. Global corporations listing assets and issuing financial certificates directly on the Bitcoin base layer. And everyday people, living in unstable economies like Venezuela or Lebanon, finally having access to sound money without needing anyone's permission. Thanks to its decentralized structure, its built-in security, and its limited supply, Bitcoin doesn't have to replace the existing system overnight. It only needs to act as the base layer, the bedrock for global value. A kind of layer zero for finance, like gold used to be, but more powerful and more accessible. With ongoing innovation like the Lightning Network, Layer 2 technologies, and personalized wallet solutions, Bitcoin is evolving beyond speculation. It's becoming a real-world financial ecosystem. So the real question is no longer, will Bitcoin go up tomorrow? The real question is, if the future of global finance runs on Bitcoin, do you want to be left on the sidelines? Or will you take part from the very beginning? Part 8. Closing. A message to you. If you've ever felt powerless in today's financial system, where your salary never seems to keep up with inflation, where governments print more money while you're told to tighten your belt, then maybe it's time for a new perspective. The Bitcoin standard isn't a book for tech experts. It's not just for investors or traders. It's a book for thinkers. For anyone who wants to truly understand what money is, why the system feels broken, and how you can protect the value of your time and your work. Bitcoin doesn't promise overnight wealth. It's not a lottery ticket. It's a monetary system built for grown-ups, for people who take responsibility for their own future. And if there's one thing you take away from this video, let it be this. Start asking better questions, start learning for yourself, and never again let the system decide your financial fate. So now I'll leave you with a question. What will you do with this knowledge? That's for you to decide. But if you want to keep exploring new ways to think about money and freedom, make sure to subscribe to Investory Hub, because every video here is a step closer to taking control of your future. And maybe in the next video, I'll share a passive investment strategy inspired by this very book. For busy people who aren't tech-savvy, but still want to protect their wealth with a new kind of financial standard. Are you ready? Because the Bitcoin standard is only the beginning.